So I'm Nick Gostick, Director of the Smart Innovation Hub and Head of Keele University Science and Innovation Park. Annette Shipley has joined us, and she's an entrepreneur in residence. Do you want to give a quick wave? Anne Diggins from Dains Accountants, and Andrew Bentley as well from Dains. So very quick recap so far. Anne has very kindly given us an overview of the support that the government has put in place, which is very helpful. We won't go over that again, but I'm sure most of those things will come up again during the discussion. Very quickly, if you want to ask a question, you can either ask a question in the chat, which I think most of you have found, which is just below the live feed. But if you go right to the bottom of the live feed, you'll see that there is the facility to send us a question directly. So only Annette and I will see that. So you can ask a confidential question, and we'll ask that question anonymously on your behalf, as I appreciate tax can be a bit of a sensitive issue. Before we carry on, Andrew, was there anything you wanted to add to what Anne said?
No, other than is Annette speaking?
That's all right. Her mic's off.
Oh, it is. Sorry. I keep doing that so I don't get feedback. There are some requests in the feed just to say, could Anne recap? I know it was quite a bit you just said there, Anne, but is there a summary? Or
yeah, so shall I just do a very quick summary?
Yes, I think that'd be helpful. Yes.
In terms of the self-employed, so if you are not a limited company and you operate as either a sole trader or a partnership, then you do not have to pay your 31st of July payment on account. There is no interest or penalty for not doing that. It has to be paid by 31st of January 2021, but you don't have to worry about July. For VAT, you don't have to pay this quarter's VAT bill that is due, but the tip there and the important thing is that if you pay that by direct debit, it will automatically go through unless you cancel the direct debit. So you must cancel this quarter's VAT direct debit. Again, there is no penalty, no interest for not paying that. In terms of corporation tax and pay as you earn, whilst there are no specific measures, so there's nothing sort of generally announced, we're finding that if we phone HMRC on behalf of clients to defer either of those payments or both, then HMRC are allowing a 3-month deferral, again, with no interest and with no penalty. So it is worth making contact around corporation tax and pay as you earn. And the other thing that I just threw in there at the end was around research and development and the research and development tax credits, to say that if your business is eligible, I would encourage you to carry on, get your computations done and make a claim, because HMRC are making those repayments within 30 days, and that is a valuable source of cash flow. The only other thing that I just picked up on was the job retention scheme and furloughing staff and the difficulties around doing that with director shareholders of owner managed businesses. But maybe that might come out in the questions in a bit more detail.
Thank you. Thank you, Anne.
Okay, thank you. Right, so we've got a question come up on the chat. Okay, so the main focus of today's seminar is around taxation, but I've got a question from Beverly about advice if you're making a successful bid for a large research project or selling by license. So the tax aspects of that will be around R&D tax credits. Yes. And actually what sort of research bids you could use R&D tax credits on, because correct me if you're wrong, if the government gives you money to do research, it then won't give you more money to do.
Well,
but perhaps you could comment on that. And also, if you're perhaps doing research, but where you've licensed the IP to a third party.
Yeah. Okay. In picking up the first question there around the grants and the government giving you money and then being able to claim R&D tax credits, sometimes you can, and it does depend. So if the grant that you get is something called state aid, so EU state aid, and a number of the main grants qualify for state aid, then you can't claim the normal SME tax relief, which would give you £2.30 tax relief for every pound you spent on R&D activity. So you couldn't claim that if your grant is state aid. However, you can still claim under the large company scheme for R&D. It works in a different way and you don't get as generous a relief. But basically, if you spent £1, it would cost you about 87 pence under the large company scheme. So it's still worth claiming if the grant is state aid. If the grant isn't state aid, so it doesn't, it's not one of the EU funded grants, then actually you take your R&D spend, you deduct the level of the grant that you've received, and you claim the normal SME tax relief on the balance. So you can still be eligible just on a reduced amount. And that would be the £2.30 tax relief, the 230%, even though you've had a grant. So it can still be worth claiming. Those two sort of interact quite well. So that was the first half of the question.
Yeah, I think the second half was about where you've licensed the IP or your product to another company, but maybe you're still doing research. So I guess that's really contract research and whether you can claim R&D tax credits if you're effectively doing research for somebody else.
And then it really depends, because it depends on where you're doing research for somebody else. It comes down to the actual terms of that contract. So basically, in a very simple nutshell, are you carrying the risk of that R&D? So if it didn't work, for example, and if there was no output, would somebody still pay you? Or would you have to go back to the drawing board in your own time? If you would have to go back to the drawing board in your own time, and you're therefore bearing the risks, then potentially you can claim R&D tax credits. If you're not, and somebody has just outsourced that work to you for a retainer, for example, for a monthly period of time or however long, then it might be difficult. It does depend on the actual circumstances in every instance, and you need to look at those contracts and the relationship. Okay, great.
Very quick question, and coming back to deferring payments on tax, will HMRC be charging interest on those deferred payments?
If I'm honest, where it's corporation tax and pay as you earn, there doesn't seem to be a standard policy, because we've rung for many, many, many clients, the vast majority of which have no interest. There's definitely no penalties. Absolutely, definitely, across the board, no penalties. Generally, no interest. In some instances, they are saying they will charge interest, but at just 1.25%. That's a minority. I think HMRC haven't got a policy as such there. So it does come down to the individual company circumstances again.
Right.
And just to be clear, from a VAT perspective, it is a deferral. It is not a elimination of the liability that you owe, and you still need to file your VAT returns on time to do that. It's just the payment of them between at the middle of March and the end of June is deferred until some later point.
Well, as Anne had mentioned previously, you do need to do for that to happen, you need to cancel your direct debit, otherwise it's likely to be taken.
If you pay by direct, if you
pay by direct
debit scheme in place, yes, and that's especially true if you're on monthly as well. So not only quarterly VAT returns, but monthly VAT returns. If you have a repayment, those implications do not apply, because you need to put your repayments in to get your money back. They will still be repayment claims submitted in that period.
Okay, thank you. It's gone a bit quiet on chat. Now you can hear us. Can I urge you all to get your questions in? And if you haven't said hello, do say hi and introduce yourself. And we're all about networking, so if you want to say who you are and what you do on the chat, please do, but don't take too long typing, because you'll miss the very important advice from our panel.
Can I just have a clarification, which people might be wondering about on R&D tax credits? If you have a particular project growing, because some of my clients have projects in train, they're doing that already, and if they want to bring a new product to market that they've already started, can they claim the R&D tax credits as usual?
Yes. So you can claim R&D tax credits for any eligible item that you are creating. The fact that you've already claimed on one thing, and maybe you're, developing version 2 or developing something completely different, doesn't stop you claiming R&D. You just have to be able to quantify when a project starts and ends. So if it's a version 2, for example, the end of version 1 would be when you've launched that market. But if you're then saying, well, actually, we've launched that, but we're going to improve it, your R&D for version 2 starts the minute you decide that you're going to improve it and move forwards.
Thank you.
Okay, so I've got an anonymous question come through. Again, not really a tax question, but I'll turn it into a tax question if I may. The B word's been mentioned. I've forgotten all about Brexit. So it really is a question about setting up a company in Europe nearer to a manufacturer. But I guess that raises all sorts of issues around tax, where you've got staff operating in Europe, and whether or not you can benefit from two countries' COVID-19 responses.
Yes. And interestingly, I was talking to a client the week before last, and they have an operation in Austria. So it isn't a full warehouse or a full office, but they do have an individual who is operating in Austria for their UK business. And they have been able to claim under the Austrian government's equivalent of our furloughing job retention scheme for, I think it was 70% in Austria, but for 70% of his pay rather than the 80%. Because he is an Austrian national living and working in Austria just for a UK company. So that's been interesting that they've been able to do that. I mean, in terms of setting up operations, certainly if you're creating a substantial presence overseas, you do have to worry very much from a tax perspective whether you're going to create something called a permanent establishment. So something of substance, an office with people in, a warehouse, a factory. If you do that, you could end up taxable in wherever that location is, and also taxable in the UK, depending how you set it up. So you need to then worry about double tax treaties. Now, across Europe, there are double tax treaties. They all work in the same place, but you just have to check that to say in which location am I ultimately taxable. There are a lot of different considerations, really, when you're setting up operations overseas. If you're moving people from the UK to another country, then you also need to worry about payroll and where they are taxed and where they need to pay as you earn.
Okay.
I don't know if somebody can answer this. I mean, some people have asked me, what's the best way to contact the tax office at the moment? Because, you know, it's not the easiest thing to do given everyone's trying. So what's the best way?
There is a coronavirus helpline number. Normally, accountants have a different number, so we normally have an agent number. Under the coronavirus new position where we are, there is just one number, so agents ring in on the same number as people, so it's there on HMRC's website. I can't remember what it is off the top of my head. It generally hasn't over the last fortnight. It was very difficult to get through 2 weeks ago. Currently, it doesn't take that long. Generally, maybe you might wait 15 minutes to get to speak to somebody. But if you ring the coronavirus helpline number, they are very helpful.
Thank you.
Okay, I've got a question come in on the chat from Andy. He's just wondered what the rule on holiday accumulation for furloughed staff, and are there any tax reliefs for paying holiday pay if we still have to give the full entitlement?
Do you want to pick that up, Andrew, in terms of the holiday pay?
Yeah, in terms of holidays, furloughing staff is just a continuation of employment issue. So long as you have in your contract of employment, or you've had your contracts of employment altered by mutual agreement so furlough can take place, staff can be furloughed. Holidays accrue during the furlough period. So if they accrue, whatever your holiday rules are within your organisation or inside your contract, those holidays will still be accrued. There is a question as to whether you can be on holiday or not whilst furloughed. Up until Friday, there was a consensus amongst everybody that no, you couldn't be on holiday and be on furlough at the same time. Those rules seem to change on a daily basis, and in fact, not less than an hour ago, we had an internal email come through for some updated guidance that was issued on Friday last week, where it seems to suggest on the employees portion of HMRC's website, you can be on holiday whilst you are furloughed. However, on the employers bit, that has not been updated. And so there's at the moment a little bit of a mismatch and inconsistency about whether you can be on holiday whilst on furlough at the minute. I would take it that the previous guidance that we had where you couldn't be on holiday while you were furloughed would still be in place. But obviously, because of this, we need to go away and try and find out what the right answer is to enable advice to be given. But yes, on an accrual basis, holidays still accrue while people are on furlough.
And I think the thing there, and the challenge, I suppose, for business there is actually that if you've furloughed people because you have no work for them to do, but then they're still accruing holiday, and when they come back, they may want to take that holiday over a shorter period of time. I think that is going to be a challenge for business as to how business has to deal with that. Because it's taking people out of your business practically for longer periods of time when actually the business needs to push on and recover from where we currently are. So I'm sure
when all this is over, and hopefully that will be fairly soon, that come the end of, say it was the end of May or the end of June, and nice weather picks up, and everybody who's not taking any holiday in this first 2 or 3 months, if your holiday period runs from April to March, they want to take their holidays in the summer months, and everybody might want to be off at the same time. But of course, from a business perspective, they may not be practical because as business then kicks in and people want stuff and they want the services or they want the goods that you're producing, and they want it probably yesterday because they didn't have it in the first 3 months, and they now want it now for their business to enable them to move forward, the business needs to really consider any holiday requests from their staff, and again, deal with that on a fair and reasonable, but on a business case basis. And therefore, you need to again consult your contracts of employment, the terms and conditions you have with your employee, to make sure that any requests you can actually turn down should the business need be there, so as you can actually work on the business and do the things that the business does. Or most businesses rely on people, and therefore if the people are not physically there, the business cannot do the things that it does anyway. So you just need to be careful around that.
But there are no specific tax reliefs for business for the holiday pay, which was the other half of the question. The relief is for the cost of the holiday. You get that as a deduction against your profit, but there's no other specific relief.
Yeah, we've just had a question in asking something that you've clarified before, Amber. I think it might be with the sound got missed. And Sarah's asked, can directors be furloughed? And if so, how does this work?
Yes, and yeah, I think it was when the sound was off. It is very, very difficult for directors to be furloughed. Because the rules of furlough are that the individual can no longer do any work for the business once they've been furloughed. And if you are the only director in an owner-managed business, so you are the director shareholder, there will almost certainly be things that you need to be doing from a business perspective during this period, because you would need to arrange finance maybe, or think about strategy for when we come out the other side, think about what happens to employees and when you furlough employees. Any of those decisions, doing any of that activity, would mean that you couldn't be furloughed. The only activity that a director who is furloughed can do is file things with Companies House. So file your confirmation statement annually. That means it's very, very difficult to do that. Where you can is if, for example, you have 2 or 3 directors in a business and you can leave one director to do the decision making and furlough the other directors. And as long as they then do no work, then you can do that.
Yeah. Okay.
Great.
So can I just, so in terms of then filing tax returns, what's the extended period for tax returns?
For tax returns for companies, so for limited companies, you can apply for a 3-month extension, which is a very quick process. You literally answer 2 questions on Companies House website. So you can apply for a filing extension to your annual accounts on Companies House. And once that has happened, your tax return filing deadline automatically changes, because your tax return filing deadline aligns with that Companies House. So if you get a 3-month extension, you get a 3-month extension to filing your corporation tax return. So that's automatic. But you have to trigger that in Companies House.
Okay, thank you.
Okay, we've still on the question of furloughed employees. I've got a question coming in from Ari Hawazi. Hi, Ari. Actually, it's about how you claim for furloughed employees, which is not strictly tax, but perhaps if you could comment on that. I believe the website went live today, so very topical.
Yeah.
But I've also got a supplementary, if I may,
Okay.
and that's if the government pays you eventually for your furloughed employees. Is that money taxable?
Okay, do you want to pick up the practicalities around the portal, Andrew? Because I think you've logged on already this morning, haven't you?
Yeah, well, I logged when it went live this morning. I just logged on to see what it looked like. At the minute, I haven't made a claim, so I haven't really got past the first hurdle. But the first thing you are going to need is your government gateway user ID and password. If you don't have that, you will not be able to log on and put the details that it requires in to do that. My understanding from, again, a briefing I had at the back end of last week is that if you have less than 100 employees on furlough that you're making a claim for, you're going to have to put all kinds of details in for the individual and for yourself. So your PAYE scheme reference number, the number of employees furloughed, each employee's national insurance number and their employee number, and you're going to have to enter those individually. I have not yet done it. So at the minute, we have in Dains, we have a specialist team who is dealing with furlough and furlough claims. And I'm sure once they've tried to do one this morning, we'll have all sorts of practical tips on how you do or don't complete the information that they require. But the portal is live. If you go to hmrc.gov.uk, you can find it through the job retention scheme bit, and you can click through and you can start the ball rolling. But you must have your government gateway user ID and password to enable you to make a claim.
And in terms of the second half of that question, which I think was about, am I taxed on the furlough money? Effectively, yes, you are, because the furlough money that you will receive reduces your wages cost in your accounts. And so you will then pay tax on the amount. It will increase your profit effectively, and you'll pay tax on that. So indirectly, yes, you will be taxed on it.
Okay, thank you. And the final bit of clarification on that is that the furlough scheme has been extended at the back end of last week to, I believe now, the 1st of June. Is that right?
30th of June.
Sorry?
30th of June.
30th.
Right. Okay. 30th of June. So that scheme has actually been extended. Experience I had some years back was a company where we had a very successful year, followed by a bit of a disastrous year, really, related to changes in government legislation, which changed after the end of the tax year, and business dropped off a cliff. So we were then faced with having to pay corporation tax right in the middle of the year when cash was at an absolute premium. So for companies whose maybe tax year has just ended or hasn't yet ended, is there any way in which companies can plan for a bad year after a good year? I know we have to be very careful here where what is legitimate to do and what isn't. But I think if you know because your business is impacted, is there anything you can be doing now to mitigate that?
And I think the first thing that you should think about is actually, it's not a tax thing, but it is, it does potentially help. And I would think about, actually, should I change my year end? Because if I have had a good year, but I know in the current period I'm going to be loss making, for example, then there is a little exercise to do to say, well, actually, if I change my year end, can I capture those losses more quickly? Because the losses, all being well, we come out of this before too long and things start to pick up. But it's in this initial 3-month period or 4-month period when actually I might be losing money. And I would think about how we capture those losses more quickly to get the relief for them against the profits that I've made in the previous year.
And probably the term year end is probably not the right thing, because that seems to suggest that each period has to be a year, and each period does not have to be a year. If you're a company, you can have, so long as it's not your first period, a period of anywhere between a day and 18 months. You don't have to have it doesn't have to be equal in each subsequent period. So it's a case of period end. One of the things I would say, just following on from Anne, and in terms of identification of results for different periods, it is therefore key critical to make sure that you have management information systems to enable you to, at the end of at the end of each month, to determine just what your profits or your losses or your results are at the end of every period, to then decide what is the best thing or what is the best day to draw up my account to. You don't have to decide very quickly. You have until actually the Companies House normal rules are 9 months. You have to file accounts within 9 months of the end of your accounting period. Now, normally that would be a year, and therefore you've got 9 months to file your accounts. Actually, until that period is late, you can change your accounting reference period to anything you like, so long as you don't extend it any more than once in 5 years. So you've got some time after your determination of what your results are to actually choose your period end, and therefore maximise the amount of carry back claims should you have a loss, to make sure that you can take your loss back and mitigate some of the corporation tax that actually you may not have yet paid, because you have to file your corporation tax. You have to pay your corporation tax again within 9 months of your accounting period end. It is all of a bit of a mathematical calculation and a bit of a sort of a judgment call as to when you draw your accounts up, because the other thing to think about is, whilst I may have those results, those poor results in a subsequent period, of course you need to draw some accounts up and file them on public record. The question is, from a not particularly a taxation point of view, but from a commercial point of view, whether you want a set of financial information that's available to the public on Companies House, which shows that downturn fairly promptly. For valid commercial reasons, you may not want to do that, and you want to delay that. So there is a taxation implication and a cash flow implication, but there's also a commercial implication to just be aware of as well. And again, there's no until your next set of accounts are late, you can actually choose which period end you draw your accounts up to. But management information is key. The other thing just to say is the accounting profits and the taxation profits may are in nearly all cases different, but in some cases may be substantially different, particularly if you're doing R&D claims. Because your tax losses may be a lot more than your accounting losses, and so therefore you just need to again work through that with your advisor to make sure that you understand what both your accounting and your taxation position is, to maximise that.
Okay. I've got a small question on a slightly different issue, but it's one I know that people are interested in, and that is, what's the status of tax audits? Those organisations, companies that need to be audited. What's the status of those? Can they be deferred, delayed?
So for audits generally of limited companies, you can delay that by extending your filing deadline, because you'd normally have to complete that within 9 months of the year end. So you can delay that for 3 months. It's currently 3 months. So you can
but it is a deferment again. It's not a withdrawal, it's a deferment. But it's all around your company's filing. You still have to file inside the company regulations, whether that is at your accounting within 9 months of your accounting reference period date, or within the delayed period that Companies House will grant. But you still have to have an audit in that. But if you need an audit, you've got to have one, is the bottom line.
Just going back to furloughing, and again, this is something that I've been asked, and that is, when you've got employees who are working from home, genuinely working, sorry, not furlough, but working from home, will they be able to claim a personal tax deduction for extra expenses for having worked at home, for example, heating or telephone?
Yes.
Is that something that's been considered?
Yes, it is. And it actually changed in the budget. There wasn't an awful lot of announcements in the budget in March, but actually that was one of them. Individuals used to be able to claim £4 a week. That was increased from March, so it takes effect from the 6th of April, to £6 a week. So that individual can claim £6 a week for their heat and light. There is another way of doing that. So if the individual thought, well, actually, £6 a week for whatever reason doesn't cover it because it's quite power hungry, what I do from home. I'm struggling to think of a good example of what that might be, but there could be some. And then you can actually claim a proportion of expenses. So the physical things you've spent, but you do have to then be able to justify what that is. The £6 a week is the easiest way of claiming. And that's £300 a year. But if the employer doesn't pay that, the individual would have to do an income tax return, so complete a self-assessment tax return to actually make the claim. But that would be fairly straightforward.
Okay, thank you.
Right. Time is running against us. I've got one last quick question, and that is just any feedback. In the unlikely event that HMRC owes you money, I've previously found them not as quick to pay as they are to demand being paid. Not unsurprisingly. I don't know in the current crisis whether that has changed at all.
They can sit on repayments for quite some time, and generally they will, if they can find a reason. The cynic in me says they will. However, we have certainly found with R&D claims recently, for example, they have come back within 30 days. What I encourage every business to do, if there is a refund due, once 30 days have elapsed from when you notified HMRC, you must contact them. Because if you contact them, then you will get yourself in the system. It moves you up the list if there is a list. You must contact HMRC and ask for your repayment. Generally, in my experience currently, they are coming back. Refunds are not being withheld, but contact them. Or get your advisor to contact HMRC and push for it. We have a standard policy that once it's 30 days, we've made a diary note and we're on the phone.
Right, good. So any last questions or comments? Great question from Stephen Roberts. Who is Andy's favourite doctor? Is that a comment about your background?
It is. Peter Davidson, probably, but there you go. I think that's an age thing rather than anything else.
Yeah. Stephen says his is John Pertwee.
All right. Okay. There's always one.
Yeah.
It's always Stephen.
Right. Okay. Have we just got time for one last question? Business greater than £25,000 rateable. Is there only one grant of business rate relief, or is there more to come? Yeah, that again, it's off tax. That's the one-off 10k payment to companies for who are eligible for business rate relief.
Yes, for small business rates relief. If you're eligible for small business rates relief, you're going to be eligible with very few exceptions for a grant of 10 grand. The local authorities are actually dealing with the grant applications, and I know that again, going back to the guidance originally said that your local authority would contact you if you were eligible for the grant. And I know that dealing with businesses in the locality, particularly talking about Stoke and Newcastle, that a lot of Newcastle businesses where they are eligible, Newcastle Council have written to them and asked them to go on the website and apply. And I've been helping my clients last week and part of the week before to help them to apply for the grant fund to come through. However, there are some businesses in the Stoke-on-Trent Council area who've not had a letter that they think they're eligible, and my advice is to not wait for the letters to come through, because we were expecting a load of letters from the council, is to not wait for the letters to come through and actually ring the council to see whether you are eligible or not, and then go on the website and make a claim. Having discussed that with them, that the larger grant is for retail, hospitality and leisure businesses only. So in terms of that, but particularly in terms of small business rates relief, if you do get that and you've not had a letter, contact your local authority immediately, so as you're in the queue to when the payouts come.
Okay, and I know we've got some of our tenants here from the Dains Accountants Foundation building, and we did have some interesting discussions because the building's so new that they hadn't been and done the business rate valuation. So right. A lot of companies weren't technically signed up, but of course, you know, really they were. So we have managed to sort that out. But for any of you on the webinar who haven't kept up with the emails we've been sending out, then either check back or get in touch with us. So I think that probably is about time to start wrapping things up and give people chance to get a cup of coffee before their next online meetings. I do find that they do come thick and fast as we're all working from home. So I'd just like to take this opportunity to thank Dains very much for your support and for coming on this seminar with us. I know that there is a COVID-19 advice hub on your website, so it's very easy to find. Just go to your website and you can sign up. So I've been getting regular updates on issues, not just tax, but any accounting issues around COVID-19. And I guess for many businesses, the first thing to do is manage your cash in this crisis, and I guess you guys are a very good protocol for companies that are looking to manage their cash and to do cash flow.
On the hub, Nick, Jenny has put a link, so if people look at the stream of comments, there is a link there that people can just click on that, and I'm assuming just get signed up to your hub.
Okay, thank you very much.
Thank you.
I'd also like to thank you, Annette.
You're welcome.
Annette will be joining us on future webinars, and so hopefully you'll get to know her and her Entrepreneur in Residence colleagues as well. There are 3 of them, so we'll introduce others later. I'd also like to thank my team who have rushed around like mad things trying to get this all together, all working from home instead of the nice shiny new building that we just got. And also thanks to Jonathan and his team at Hixon Group, one of our resident businesses in the Dains Accountants Foundation building, who literally turned things around on a sixpence, if anybody can remember those. And got this up and running very quickly. Apologies to those who had a few issues about sound, but I guess that's the joy of doing things live, that you get these odd issues. So I hope it didn't upset your enjoyment too much. Just wanted to say that our next webinar is coming up on Thursday at 12 o'clock. That's Thursday the 23rd, when we've got Alan Rogers, who's chairman of the Local Enterprise Partnership and also CEO of Visual. So again, there is a link on the sign up page or for this webinar, but we'll be sending reminders out about that. And again, my team are all still working, although at home. So if you want any advice or support, particularly in relation to innovation and working with the university, then our Business Gateway page is a good place to start to make an inquiry. Office space for when we can use offices again. Happy to hear from you. And also a plug for colleagues at other business support organisations, particularly the Growth Hub, who have been working really hard to support businesses at this very difficult time. So again, thank you very much to the panel. Thank you for your questions and for coming along and listening to us. And with that, I'll say ta-ra.
Thank you. Bye.
Bye.
Bye now.
Bye, folks.
Bye.
Bye.